Hello, good morning. It's Wednesday the 28th. I'm FX Plu. Forgot to charge the air wheel, so I'm on foot for the market brief. So the MPC is warming up to one of their most crucial meetings next week, and they really should limber up a bit because the Bank of England is rather stuck between a rock and a hard place at the moment. The current rate hike cycle might not be fit for purpose. Interest rates are expected to rise to about 1%, which isn't too bad considering inflation could easily reach 10%, but the key challenge for them is how to preserve economic growth at the same time. If they plough on and continue to hike rates, then the economy is likely to falter further. So even if inflation is brought back under control, they will have failed against their remit. But if they stop rate hikes for a little bit to allow growth to recover, inflation will run wild once again and they will have failed against their remit. The current market view is that risk is balanced more towards higher inflation, so expectation remains for at least a 25 basis point rate hike on Thursday. But the outlook is pretty grim for sterling. Indeed, the prospects of either pausing rate hikes or causing the economy to falter, well, that's seeing sterling suffer. We fell to just over 125 against the dollar yesterday. And to put that in perspective, we closed last week up near 131. So we've lost about 4.5% against the dollar this week, and we may have further to go. Just bear that in mind. And please do play nicely if you get a margin call against any open positions this week. It's rather squeaky bum time for a lot of credit departments right now. They're rather up against it. Over in the US, Fed expectations continue to drive the dollar higher. The market is looking forward to a 50 basis point rate hike next week, coupled with the confirmation around their plans to taper the Fed's balance sheet. Close attention will be paid to Powell's press conference after the rate decision next week, as we all look for clues to confirm the suggestions that another 50 basis point rate hike may well follow again next month. For now though, the risk balance for the US economy remains heavily skewed towards rising inflation, much more than in the UK and the Eurozone. So there's a lot more headroom for a more aggressive policy action. And this policy divergence looks likely to keep the dollar well supported over the rest of Q2